yes, inventory's low. To increase inventory, you've got builders who are building but can't really build fast enough. There aren't that many specs.
And not at a low enough price point.
And not at a low enough price point. In our area, you could find new construction under 7, but they go like this. And like you say, if you've got that move up person, well, they don't want to give up the house they're in, maybe not now or for a while because the rate's so low.
Yeah, even if they're getting a little bit nicer home, probably even a lot nicer home, I think the payment difference is so severe that it's prohibitive. And that's really what, if builders could build entry-level homes all day long, then I think we'd work our way out of this fairly quickly.
Welcome to High Trust Professionals, a podcast where we interview top industry and community leaders, business owners, and entrepreneurs from across the country. Hear what it takes to build trust, be a respected leader, be productive, and win your day. Sit back and relax as we dive into another episode of High Trust Professionals podcast.
Hey everyone, welcome to High Trust Professionals podcast. I am your host, Lynette Arrasmith. Today, I am here with my longtime friend who also happens to be my boss, Brian Cross. Hi, Brian.
Hello, Lynette. How are you today?
I'm good. Brian happened to be in Omaha visiting our branch today, and I might have just suckered him into coming in for a little conversation for the show.
I was not expecting this.
No, you were not expecting this. Brian, is
super excited about the opportunity.
Good. Yeah, Brian's in our Kansas City area, actually. So Brian Cross, Senior Vice President, Regional Manager of our mortgage division with First Bank, headquartered in St. Louis.
Yeah.
And so let's first give our audience an idea. Just tell them a little bit about First Bank. Let's start there.
Yeah. As you said, First Bank is headquartered in St. Louis. It's about a $7 billion asset bank, family owned, so not a stock owned bank or anything like that. The Deerberg portion of the Deerberg family owns the bank.
Family owned for like 100 and some odd years, right? Yeah.
Something like that.
Yeah,
yes,
yeah,
100 plus years. Branches in St. Louis, branches kind of scattered throughout California. And the mortgage footprint is sort of everything in between. The group that I manage that you're a part of is mostly Kansas and Nebraska. We've got a few loan production offices in those states, and then kind of mid-Missouri as well that I cover. And then the St. Louis market and California is managed by a couple other folks. So, but we do somewhat nationwide lending on a lot of our product, as you know, and then we have portfolio products that we maybe do more of in footprint, which would be any of the states that we have a bank branch or a mortgage office.
Yeah, or a mortgage office, which is great. Well, it's kind of nice. And fun fact, the Deerberg family who own the bank also own a winery.
Several, I think.
Yeah, not just, in fact, weren't we just in Herman, Missouri?
We were in Herman. They own Hermanhoff and several other businesses there in Herman, which was a lot of fun.
Fun fact, audience, we had a leadership summit in Herman, Missouri. And it was
We didn't
amazing.
get to take the train, though.
No, shoot, that's right.
We took the, we had to drive.
Yeah, darn it. But
for
still,
taking the Amtrak train
it's pretty cool.
Is the fun part from Kansas City or St. Louis.
What an awesome little spot, though.
Yeah,
awesome. So tell our audience about you. I kind of have the pleasure of knowing you for more years than we will mention. Oh, by the way, Brian actually recruited me into the mortgage business, people, in 2008
or 9. There's debate.
8 or 9.
There's debate right there.
Okay, 8 or 9. I say 8. He says doesn't matter. So we've known each other a long time. So give everyone your background.
So I've been in either banking and or mortgage lending since 1991. So 32 years now.
Wow. You owned.
I did own a mortgage company from 2000 to 2008. It was called Choice America Lending.
Yeah, that's right.
After I left that company, we basically sold that company to a bank, and then I joined Wells Fargo as a manager in the Kansas City market, and that's when you and I started working together. So
that's right. Fun times.
Started at First Bank in 2018 after the sale of Pulaski Bank, which I had managed for about 6 years.
Yeah.
Also another St. Louis bank. So I've been with St. Louis banks since 2011.
Staying in that
12 years now.
In that area.
Yeah.
So mortgage lending for a long, long time. So, I asked you to hop on for a quick chat just because we're kind of in an interesting time. interesting time in our respective businesses of mortgage lending, but it also bleeds into the real estate market,
Yes.
our real estate partners and what they're feeling and going through right now,
Yes.
the economy. And so, to our folks who are listening and watching, instead of Brian and I sitting across the desk and just chatting about these things amongst ourselves, I thought, you know what, we're going to hop on camera and do it so that we can educate everyone that's listening as well. So our business is cyclical. So what kind of challenges are you seeing right now?
Well, I mean, you just said it. It's cyclical. So in 2020, during the pandemic, interest rates drove down to, I'm sure some people that would listen to your podcast might have a 2.5% mortgage.
Which is crazy.
Which just sounds ridiculously low right now.
Yeah.
And so many of folks in America locked into those rates in 2020 that as the rates started to elevate, and they really started to go up, I'd say January of last year, so 2022, and the Fed was forced to start raising rates in that last spring to fight inflation. I mean, they have a mandate of trying to hit a 2% inflation number. We were seeing numbers of 6 and 7 all of a sudden in May. And, so they've been rapidly raising the federal funds rate, and that has raised mortgage rates from in the 2s to in the high 6s and even touching 7%. We all are seeing some rates in that high of a range. And so what that's done is really kind of hamstrung the market because, you could say, well, you can build your way out of a low inventory, but those of you that have looked at new construction, I'm sure even in the Omaha and Kansas City markets, you're seeing, 700,000 is sort of a price point where you buy new construction, and not everyone can afford that. So the buyers that can afford that don't want to let go of their home that has a 3% or below rate to go buy something that has a 7% rate. So they're not putting their homes on the market, and there just isn't enough inventory out there. So we're dealing with that now after such a wonderful time in our business. A bad time, obviously, with COVID and everything else in 2020, but a wonderful time turned into a not so wonderful time.
Sure.
As we sort of fight through these issues in our business.
Well, and you and I have been around long enough to know that this isn't the first time.
No.
Won't be the last time, but we also know that there will be an end to the madness.
Absolutely.
And it's not going to be tomorrow.
Absolutely. Well, we saw just last week CPI number, which is the core product inflation. I don't even profess to know exactly where all these reports come from, right? But it was 4%. It had been running in the 6s, much lower, not at the Fed's mandate of 2.
Right.
So we'll see tomorrow if they've decided that that's enough progress, though, to stop raising interest rates. They may take a pause for the first time.
The Fed. We're talking about the Fed.
We're talking about the Federal Reserve. And if they do, I do think mortgage rates will start to retreat back a little bit, and then we'll kind of see. Really, we always have to wait and see what they say, not what they do, but what they say they're going to do later. And that's going to be important. But I do think we're sort of nearing the peak of this cycle in rates. Some might say otherwise, but it sure feels that way to me. But it will take a while, I think, to work off kind of these low inventory and the fact that people have such low rates out there. Take a while to work that out, though.
And let's make sure that everyone understands this isn't we go from mid to high 6s to 2 and 3.
Right.
Yeah. It's not like a peak in a valley.
We'd be excited at 5 right now, frankly.
Mid 5s, low 5s. Yeah, absolutely.
I mean, when I start seeing 4.875 again, I can assure you that we'll be having a mortgage party.
Yes, we will. And I think a couple things you mentioned. Yes, inventory's low. To increase inventory, you've got builders who are building but can't really build fast enough. There aren't that many specs.
And not at a low enough price point.
And not at a low enough price point. In our area, you could find new construction under 7, but they go like this. And like you say, if you've got that move up person, well, they don't want to give up the house they're in, maybe not now or for a while because the rate's so low.
Yeah, even if they're getting a little bit nicer home, probably even a lot nicer home, I think the payment difference is so severe that it's prohibitive. And that's really what, if builders could build entry-level homes all day long, then I think we'd work our way out of this fairly quickly, but I just don't think
No.
they can. And,
Costs, you know what, costs are too high.
Yeah,
It's still hard to find workers
sure.
and cost of material. So all of those things. So let's just talk about leadership and sales in general, because I think that so much of what we do, it's sales driven. It's also service driven. You know, we have to, I feel, provide good service, good products, of course, a good process, but we need to make sure we're staying in front of people. So if we have other lenders who are listening and watching, or real estate professionals, how do we help them with the right mindset to stay relevant?
Maybe to stay busy in a down market, you'd call it. I mean, I actually just spoke with, and it wasn't actually lenders, but it was some very recent realtors on a team that I was kind of meeting with. And the first thing I said to them, they kind of asked me, how I got started doing business and how do I generate business? And the first thing I said is, well, whenever I'm in a large group, I make sure that everyone I talk to knows what I do for a living.
Yes.
I need to be known as the mortgage lender at that event or party or whatever it may be. And that's sort of step one. And, from then it's not just know what I do for a living, but know that I must be pretty good at it. Just in the conversations, I want to show off a little bit, make sure that they can see that I do know what I'm doing. And if they were so inclined to send a client, that I would take good care of them. I mean, I think that's what you're trying to convey or portray when you're trying to generate business. Then from a leadership aspect, when you're managing, to me, I like to say, I hope I lead by example. If I'm doing the right things and generating business and treating customers well and finding the right products.
Is that a question or a statement? Am I leading by example?
Yeah.
Yes,
I
agree.
I like to think I'm leading by example.
I'm teasing.
Being an advocate for the team, providing whatever need, helping them get answers that they need and that type of thing, and just doing the work. I think there's a level of work that you have to do to be a good leader also.
Oh my gosh. Yes. Gone are the days, I think, where that person back in the day we were called managers.
Yes.
You manage.
Now they have all kinds of crazy names.
I know. Yeah. You manage things, you lead people. And leading by example is definitely one. You no longer do you sit in your, big office and no one approaches you.
Right.
Yeah, we have to be approachable.
Now you get asked to be on a podcast.
Right. You're welcome. Yes. So being accessible, I would say being approachable. Yes. One of my favorite, and you do this well, one of my favorite sayings as a leader is to praise in public and criticize in private. We all need to improve, and everyone in the world doesn't need to know that. Right. If it needs to be a one-off or a conversation, for sure. Yeah, right. I agree. Well, I think also it comes down to not being enabling. I will say, as a leader, you want to be accessible and you want to ask questions and you want to help solve problems, but you want them also to be able to learn how to do it on their own.
Yeah. I think I fall into that trap, though, a little bit too, where you try to do too much for them and then they don't learn. And I think I've been guilty of that over the years. I've tried to work on that as I've gotten older, and you take a lot of pride in seeing the advancement of somebody that you're leading.
Yes,
and
I agree.
I do think you're right. The more you can teach them how to fend for themselves, the better that they become and advance down the road and maybe become leaders. I mean, that's always been the best thing for me, is to see folks that I've managed. Yeah. I use the word manage.
Flourish.
Flourish and become their own leader or manager, right?
Yeah.
And that's kind of exciting. So.
Which is great. I might have fallen into that category. Yeah, maybe.
Maybe.
So I recently was asked to write an article for our local Omaha Area Board of Realtor magazine as an affiliate member. And it was so hard. It's like, oh my gosh, like, what do people really want to hear about? Do they want to hear another story from a lender? No. So I talked about times, and it's like hard times, good times, or is it just the time? And I liken that to what we're going through right now, because we're always going to have good times and bad times.
Yeah.
But it's just where we are right now. We can't control what the Fed does or doesn't do, or what the economy is going to do. And so being mindful about how we are spending our time to be productive versus busy.
I agree with that.
Because there's a huge difference.
Well, and I mean, we talk all the time about sometimes you're in preparation for the next good times.
Right.
And
yes.
If you don't prepare for the good times, when they do hit, you may be unprepared. And so use your time wisely, as you said, while business is a little slow, to make deeper, better relationships, so that when the business does come back, it's almost like paying your tuition, right, to go to school or whatever. You're preparing. And I think sometimes we forget that if we use this time wisely now to lay a lot of groundwork, you'll flourish even more in the good times, as we said. And to me, it makes it all the worthwhile, at that point. So
I do too. You said something earlier to one of our newer loan officers, and you talked about a good time or a bad time to get into our business. Yeah. So what would your advice be to a young professional who's looking for a new career and they want to consider mortgage lending?
Well, as I told the gentleman this morning, I think sometimes getting into a market in a bad time might be the best time to get in, because again, you get a little bit more attention. The negative is you don't come across enough scenarios to learn how to navigate through those. They don't happen as often, but you also have a lot more time to kind of work through them and make sure you're getting the best deal for your client. The people you're calling on for business are more receptive to hearing from you. And at the end of the day, if you're starting in the worst of times, imagine how much more rewarding it will be in the best of times. So I don't think, for me, there isn't necessarily a best time to get in anything, but it's certainly not any worse to get in when things are slower, in my opinion. I used to say sometimes you just have to dive in no matter what it is you're doing.
Yeah.
Because you can talk yourself out of anything.
That is so true.
But what you try to do is talk yourself into something sometimes.
The alarm goes off in the morning. I talk myself out of working out.
I'm good at talking myself out of stuff, but I also feel like I'm pretty good at talking myself into things at times too, and that's a good thing.
Oh, I think it's a great time to, like you said, learn. You've got accessibility to the people that will be a great guide for you.
Yeah, coaching is easier to come by when the other people aren't as busy also.
But also making sure that you're creating good habits. And that's my big thing. What are your habits? It's the prospecting, it's the coffees, it's getting to know people, it's the networking. Now's the time when you have time to do that.
That is true.
Yeah. So we are always looking for good people in our business,
also true.
Experienced or otherwise, aren't we, Brian?
Yes, we are.
So let's wrap up with this. Well, first of all, is there anything that I didn't ask you or didn't cover that you'd like to share with our audience?
I think we covered most of it.
We did. We've been around for a long time. The good, the bad, the ugly.
Yeah.
Stay the course.
I've been. You've heard me today. I've been saying, you know what? I'm super happy with our team here at First Bank. I think we're outperforming our peers, and I think a lot of that speaks to the talent that we have on our team. And they're working hard and putting the effort in, and even in bad times, they're doing more business than their peers. They're not doing maybe what they want. They would love to be doing more, but they're outperforming their peers, and I think that's something to be real proud of. I know for me and for you, and the rest of the bank is super excited to see that. So. Yeah, I mean,
let's put parentheses around bad times for those that are just listening, because sometimes it's what's between your ears that stops you from doing more or being better. Oh my gosh, rates are so high. Well, are they? I don't know. Like you said, people are still buying houses.
Yeah, one of our team members in Lincoln, Nebraska, has been in the business 35 years, and he had a client that actually came back to him this year and shared with him his good faith estimate from 1988.
Oh my gosh.
And they were super proud because the rate was 9%.
Yeah, right.
And they were excited about that rate.
They had to pay points, didn't they?
They had to pay 3 points, but the seller paid 2 of those.
Oh, okay.
So the seller paid 2 and they paid 1, and they were really happy. And it just, we see that a lot where you have to put things in perspective.
Yes.
And our rates are lower than that now. Now house prices are higher. I did note on that the sale price was like $90,000,
Yeah.
and that house today would probably be $300,000. So you do have to put that in perspective too. But it was interesting to see, that they weren't really fazed by the rates because they've borrowed at much higher cost before.
That's right.
So
yeah, and you're right.
You kind of again talk yourself into something or talk yourself out. You choose, and
That's right.
I choose to talk myself in more than talking myself out.
Well, thanks for taking the time to
You bet.
talk some shop. There's so many other things we could unpack, but I think that that's enough for now because we just kind of need to, like you said, we're going to stay the course.
Yep.
We're going to continue to do business the way we always have, and we'll be here whether things ebb and flow up or down. We're not going anywhere.
That is correct.
100+ year bank. So, hey guys, thanks for joining us today. I'm Lynette Arrasmith, your High Trust Professionals podcast coach, and we'll edit that out. Your High Trust Professionals podcast. What am I? Host. Oh my gosh. Hey guys, and that's a wrap. Thanks for joining High Trust Professionals podcast. I am your host, Lynette Arrasmith. Hey, don't forget to follow us and find us on social media, Facebook, LinkedIn, Instagram, and TikTok. See you next time.